Good morning. You listen to FloorDaily.net, and I'm Kemp Harr. I'm with Dan Frierson, the chairman of the Dixie Group. Dan, how you doing?
Kemp, doing very well. Thank you.
I want to talk to you about the third quarter results that you came out with earlier this month. Before we do that, we were together Wednesday. Aside from being the chairman of the Dixie Group, you're also the chairman of the CRI, and they had their annual meeting. It looks like they funded the voluntary product stewardship, right?
Yes, we did, and we think this is a way of keeping the recycling part of the industry active and alive, and we certainly hope that in the next year or so, our recycling partners will be more active than they have been in the past so that we can divert more from the landfill.
And Joe Yarborough is entering his third year at the helm of that organization and got actually a lot done last year. He rewrote the CRI 104, 105 standards and made some improvements to the Green Label Plus program and has continued to keep the EPR legislation at bay. So I'd say he's doing a pretty good job, wouldn't you?
I would say Joe's doing a great job, and the 104, 105 was a real accomplishment for the industry. These installation standards will be the standards that the manufacturers will use. They'll be written into their standards and their warranties, and I believe most every company in the industry will probably adopt them. But you know, Joe's uniquely qualified for this job, having spent some 40 years in the industry studying a lot of the issues that we're dealing with today. So he's doing a wonderful job.
Mm-hmm. Yeah, most people know that Joe spent most of his career at Mohawk. One thing I noticed as you were talking about what the CRI is going to focus on next year is you're looking at some type of marking system for backing so that recyclers can tell what type of fiber's in the face, right?
Yes, we are, and I think that will obviously be helpful to everyone that recycles product for the industry.
All right, well, let's talk about your third quarter earnings. You actually had sales of about $109 million, which was relatively flat to the year before, right?
It was up very slightly, but you can call it flat, yes.
Mm-hmm. And as you peer down into it, it looks like residential, which is about two-thirds of your business, was down about 1.5%, and commercial was up 4.5%. But the big headline there is that Atlas, which you just acquired last year, was up almost 12%, right?
Right. And if you look at our commercial business for the year, we're up now about 17.5% for the year. We think the commercial business will continue very strong into next year and beyond. Clearly, there's a lot of building going on and a lot of refurbishment of existing facilities.
You know, we've looked at where the pockets of strength are in the residential business, and it looks like that a lot of it's on the builder side and, you know, less of it this year probably on the residential replacement. Does Dixie have good positions with builder as well?
No, we're not big in the builder business. We're very strong in the upper end of the business, and with our brands of Fabrica and Maslin, we think we're the leader in the upper end of the business. I would say the areas that have been strongest over the last year or so are the builder business and the multifamily business, and those are not areas that are of strength to us. But again, we did perform slightly better than the industry during the quarter and for the year. And we feel as we get our internal issues resolved that we will continue to outperform the industry going forward because the upper end of the business certainly has performed better than the residential business overall.
And when you talk about internal issues, you're talking about the expenses that you're investing as far as being able to grow to meet the increased demand for your products, right?
Kemp, that's right. We have grown since the end of 2009 102%. And about 80% of that has been internal growth and about 20% through acquisitions. Our growth reached a peak in 2013 when our overall company growth was 30%. At that point, we accelerated a plan to realign and expand literally all of our facilities, everything from our yarn facility through a new distribution center. This has required adding about 50% to our head count in the company, and obviously in a very difficult labor market where you have to hire many times to retain the type of labor you want, it has been more difficult than we anticipated. The areas that were impacted the most were first our service, then to some degree our quality and cost and yields. I can say today our service is better than it was before we started that process. Our yields and cost are showing tremendous improvement in the last quarter or so. And as we look forward, we think this will be what really brings us through and allows us to improve our profitability. Some areas that have hurt our profitability have been our medical costs, which, thanks to Mr. Obama, are very much higher than they used to be. In the third quarter, we increased rates for our associates, and we will introduce a new plan the first of the year. So we think next year and beyond, our medical costs should be back where they were before. The other area that has been really an investment for us has been the sample expense. We had 2 major national customers with resets this year. We had a record number of new products, both residentially, and Atlas on the commercial side had a record number of new products. So it's been very expensive for us this year. We felt like it was essential to do this so that we could have growth in the future. We now have the facilities to accommodate that growth. But our effort really is going to be at improving our profitability whether there is growth or not.
Mm-hmm. As you look to the future, when do you think some of these expenses and some of this distraction as far as your expansion will catch and things will start being more streamlined?
Well, we're already seeing it in most areas. As I mentioned, our service is better than it's been in a long time. Our costs are improved significantly this year versus last year. I think we're beginning to see it in our yields. And as we look forward, we think it will certainly impact our 2016 in a positive way.
In my role, I look at a lot of different numbers, and we've watched a dip in the stock value recently, which would tell us that some analysts in the business might have thought that this last couple of quarters were going to be more profitable than they were. Tell us what some of the factors are, other than your expansion, that's affecting your profitability.
Well, candidly, we thought the last quarter would be better than it ended up being. One thing I did not comment on is we have had some raw material decreases this year, which again will positively impact us. Those have been masked by the sample expense, the additional manufacturing costs and medical costs. So what we see is a quarter that wasn't up to our expectations or our shareholders' expectations, and I think that's what we are seeing today.
A lot of people see what goes on with the price of oil, and they think that that has a direct effect on the raw material pricing for carpet. And when in fact you look at Dixie's business, you buy a branded fiber, which does not fluctuate much like the price of oil does, right?
It tends to be much more stable. It tends not to go up as much. It tends not to go down as much. Obviously, there are a lot of things we buy however, that do increase and decrease with the raw material pricing behind them, as does fiber as well. So we've seen decreases this year that I think we'll be able to take advantage of going forward.
Now, I just recently talked to Kennedy on Floor Daily, and we were talking about the fact that you've now consolidated your offices in the Dalton area and are now up in the old Honeywell building, which is one of the nicest buildings in Dalton. So that's been a positive move, hasn't it?
It's certainly been a real boost for our associates. I think everybody's excited about it. They enjoy being there and working together. And it creates the atmosphere that I think is one that we believe in, and that is one where we can have a creative group doing a lot of beautiful products and development and doing it in a very positive way.
I went to the NAFCD meeting a couple of weeks ago, and on one afternoon we had a presentation with one analyst that said that the economic forecast looked like it may be taking a little bit of a dip based on the manufacturing numbers. And then the next day we heard from Trend Research, the Beaulieu brothers, and he said that it was going to be a great 2016. What are your advisors telling you?
Well, as we look at the industry, we certainly think the commercial business will be strong next year. Maslin contract and Atlas order entry is still looking good, and a lot of opportunities out there. The residential business has not lived up to what we thought it would be this year. We're hopeful it will be better next year, but whether it's better or not, we intend to develop our costs for the year such that we can be much more profitable at the same level of business. And if business is better, we have the manufacturing capability to accommodate that.
Mm-hmm. And one of the things you have been doing, and I pointed this out before, is you've been spending a lot of money in this new tufting technology that kind of puts you on the front edge of aesthetics in product design, right?
Yes, I think the tufting machinery manufacturers have done a very good job of coming up with new and differentiated tufting equipment. If one doesn't have that, it's very difficult to stay abreast of all the changes that are taking place in the market. And therefore, we have invested very heavily over the last couple of years in new tufting technology, and we're seeing those products in the market today doing very well.
Now, Dan, you're still carpet only, and there's a lot of people that have branched out into other areas. Is Dixie looking at potentially getting in the hard surface business?
Kemp, I think we will look at anything that we think makes sense. But first of all, what we are interested in is the upper end of the market, not trying to compete with some of the people in the lower end or even the middle part of the market. Our energy, our talent, our DNA is upper end of the market. If we could find the right opportunity there, we certainly may look at it. But our energy right now is being spent on continuing to improve our internal operations and getting them going the way we want them to go. Then we'll take a look at whatever opportunities are there.
All right, great, Dan. It's good to spend time with you. Again, been talking to Dan Frierson, the chairman of the Dixie Group, about his third quarter results. And you've been listening to Kemp Harr and FloorDaily.net.